I think people are really missing the face-to-face catching up with people they haven't seen in a long time. On one side, are you finding that going virtual with some of your events is saving costs at least?
Yes, I mean, I mean, because you don't have to pay for food, you don't have to pay for a location. It is cheaper, but um, I think that people would participate. I believe that they would participate more with an in-person event and
Yeah.
give more with an in-person event.
Are all of you seeing like a downward trend in giving right now because people are maybe a little more strapped with their finances as a result of the pandemic?
Definitely, definitely.
So our fundraising's down, but then we haven't been doing as much getting out there, you know, because you have to kind of weigh up whether it's sensible to go out there and ask people for money. You've got to take that soft approach to them. So we have this recovery fund that's done pretty well, but we did miss out on one of our biggest events of the year, which was our alumni weekend, where we normally have 1,200 people come down to campus, and so obviously that wasn't going to happen. So we did a virtual alumni weekend, which was kind of fun, but yeah, half the big part of the draw of St. Mary's is the location. So we did a virtual tour. Solomon the Seahawk did a tour around campus, and we got some donations in on that. We attached a giving page to our registration form. I haven't got the numbers for that. Sorry, that's alumni's business. It was okay, but yeah, we did miss having all the people down. It's usually a huge event, and we love it. But, so that was tough, but yeah, it's not been too bad.
Are you guys shifting your fundraising campaigns more to social media and web, or just kind of canceling some of the events?
We haven't been having many events as such, just because the ROI on events is so low. You have to focus somewhere, you know. But we've put out a couple of direct mails this year, which have gone back pretty good, which we were surprised about. Not surprised about, relieved about, I guess.
That's good.
Yeah, so I say our next challenge is this Giving Tuesday effort. I'm very focused on the fundraising and the foundation, obviously. In the bigger picture, COVID has massively affected the campus, obviously, because all the students left at spring break and didn't come back. So I know from administration side, it's been tough trying to figure out how to reopen the campus. Obviously, there's budget issues there because we don't have all the housing and fees that go there. That's a big part of the college's cash flows. But I know we're learning as we go along. We did learn we were woefully unprepared, as I'm sure everybody was, woefully unprepared for not being there, trying to get signatures on things, and being a state agency too. It's, you know, the state rules are pretty antiquated on a lot of things. So trying to get around, for example, HR and timesheets, we still have paper timesheets. And they initially wanted signatures on the paper timesheets. So we've had to develop a system around that. So it's been great in some ways, like say, forcing you into moving into the 21st century. But it's been quite a challenge.
I'm sure. Anybody else? All right, well then I'm going to hand it off to Jenna, and she's going to talk to you guys about technology and cybersecurity. Stop my screen share. Okay. I'm trying to get my view back up here. Is everybody seeing my screen okay? Yep. Okay. I'm glad they can all hear me too. That was kind of my next fear, with that for some reason my volume wasn't going to work.
Okay, so I'll just kind of jump right into technology. It is now considered the fourth industrial revolution. We're kind of in this day and age where things are getting automated. Everything under the sun is pretty much connected to the internet now. I mean, you have your refrigerators, washing machines, anything that can be connected, you're online kind of all the time. So you can expand as a nonprofit on your connectivity. So expanding your reach beyond the local community with an online presence, and especially through the use of social media. I say in today's society, we're kind of more inclined to do something if it's easier and kind of instant gratification of doing something. So if there's a button that I can click to donate rather than going and fishing out my checkbook that I might use once a year otherwise, grabbing a stamp and all that good stuff and taking it to the mailbox, I think it's just easier just to donate or contribute online. So I think that's kind of where we're seeing the world going these days. And we'll kind of talk a little bit about that more in depth. Cybersecurity and data protection, with things being virtual, especially with COVID happening and people working from home. This is really an increased risk with your data and share and hosting people sensitive information, names, addresses, emails, and what have you. Reduction in manual transaction processing. With your accounting systems, there are several ways to sync, import, and download transactions into your accounting system. It cuts back on a lot of just manual data entry time and kind of frees up your time to do things that fulfill your organization's mission. It could also lead to timely reporting, real-time access to financial information, and especially again with COVID, if your accounting system is kind of hosted on a computer at your office that you're not really at anymore, how are you accessing those records, and how's that disrupted your daily workflow? And cloud computing, again, online remote access to your accounting systems. So we've seen, just personally with clients and such, we've seen a lot of people shift to online platforms such as QuickBooks Online or Xero, or there's a couple of others out there that are geared towards nonprofits that I don't really have too much familiarity with, but I do know that there are several platforms out there. So I kind of wanted to talk about social media and donations. I found some statistics that were pretty interesting. 55% of people who engage with nonprofits on social media end up taking some sort of action. 59% of those people end up donating money, or 53% become volunteers. If you're an organization that collects donations of goods, whether it's like a food pantry or clothing or something like that, 53% are more inclined to donate clothing, food, or other items. And 43% of those attend or participate in charitable events in their community because of social media. Now, I do know that's kind of skewed right now with the pandemic and not being able to host live events right now, but you can even you can still utilize social media for fundraising efforts as well. We've seen some local fire departments and others have had like online bake sale goods where they, have a bunch of people bake cakes and they do like a silent auction or a raffle or something like that, just to kind of get out there and raise funds in whichever ways that they can. Nonprofits have claimed Facebook as the most important social media for their causes. Twitter came in a close second place, and then YouTube, which was, to me, it was a little surprising. This was from nonprofitsource.com. Nonprofits share a daily average of 1.2 updates on Facebook and 5.3 tweets. And for churches, about 46% of churches claim that using social media is their most effective method of outreach. Which I think now makes sense even more since, well, I mean, churches have been able to resume a little bit now, but with giving, just having a social media presence has helped their cause. And online donations. I kind of thought this chart was pretty interesting. It's just shown how many people are giving online versus checks, just kind of the upward trend every year. More and more people are geared to give online rather than cut checks. Check usage has been declining, about 1.8 billion checks every year. 54%, I'm sorry, of donors worldwide prefer to give online with a credit or debit card. 67% of nonprofits across the globe are set up to accept online donations. And custom branded donation pages that are nested inside a nonprofit's website raise 6 times more money. So just by embedding, click here to donate through PayPal or some other method, just by having that on your web page, it gives the donor an easy way to make a contribution to your organization. And I thought this was pretty interesting. Online giving is concentrated between 12 p.m. and 7 p.m. On a daily basis. So if you couple that in with your social media presence, if you're posting between those times, you're actually increasing the likelihood that people will donate to your organization. Cybersecurity. The definition of cybersecurity is the practice of defending computers, servers, mobile devices, electronic systems, networks, and data from malicious attacks. A couple more interesting statistics. A report from Risk-Based Security revealed that 7.9 billion records have been exposed by data breaches in the first 9 months of 2019 alone. That's actually more than double the number of records that were exposed in the same period during 2018. It's actually 112% higher than in 2018. And kind of studies show that with the pandemic happening and people having more time, and that means hackers as well, that they're thinking of more creative and interesting ways to try to get into your systems and steal data. International Data Corporation predicts that worldwide spending on cybersecurity solutions will reach $113.7 billion by 2022. And according to the University of Maryland, hackers are as prevalent as the virus that we're experiencing right now, attacking every 39 seconds and about a little over 2,200 times a day on average. So these are just some trends. This is actually from Thomson Reuters, who is the software solutions that we use at our firm. It just kind of outlines where you're most susceptible to a data breach. And malicious emails is pretty much the top risk there. So 1 in 674 emails is malicious in the United States, and I'm sure everybody can agree they've been seeing more, questionable emails or spam emails coming to their inboxes recently. 48% of malicious email attachments are office files. 2 most common subjects of malicious emails is invoice and email delivery failure. So if you're in the accounts payable department of your organization, you receive something from a vendor with an attachment, chances are it could, if you're not expecting it, chances are it could be a malicious email. Never open up anything that you're not expecting to receive. It generally takes about 197 days to identify a data breach, and to contain it's another 69 days. So it's not something that's usually quick to resolve. These things take time. And then there's just a couple of statistics below, just kind of with the size of your organization and how susceptible you are, how many emails, one in malicious email per 323 emails if you're an organization with 1 to 250 employees, and then with over 2,500 employees, 1 in about 556 emails. I thought that was pretty interesting. Nonprofit organizations do remain a top target. They're considered easy targets as a lot of nonprofits really don't have procedures in place, or maybe they don't even talk about cybersecurity and what risks are out there facing the organizations. They tend to donate to store sensitive donor information, as I mentioned before, names, addresses, credit card numbers, email addresses, and those kinds of things. So some significant risks in nonprofit cybersecurity. So you have your typical data breach. The attacker gains illegal access to proprietary or personally identifiable information. So this is somebody hacking into your system and getting your donors' information. Not only could it be costly to clear up the issue, but being a nonprofit organization, you also rely on, donor trust, and it can have a significant ramification in trust and your reputation. If you know that an organization has been subject of a data breach, would you want to donate to them? Would you want to provide your information to them? Forced downtime. I think the next two kind of occur more so towards bigger organizations, targeting nonprofits to bring down their systems and compromise their mission due to ideological differences. So if I'm a hacker and I just don't support your cause, I can bring down your system just to kind of force disruption in your organization to halt, you furthering your mission. And there's ransomware, and that's the one you typically see, on TV and all that good stuff. A cyber attack that takes your data or system hostage until a payment's made. So you remember even Baltimore city government, they were subject to the ransomware attacks a couple of times, and then, within a few years from today. So I think it was like 2018, maybe 19. So there's some steps you can take to protect yourself against cyber attacks. Simple ones, implementing, if you're going to use a donation platform, implementing a secure donation platform that keeps donor information and donations protected from cyber criminals. Enable multi-factor authentication, using strong passwords. So this is where a lot of, I know a lot of sites are pushing people to, enable your multi-factor authentication, requiring your users to log in using their username and password, plus some kind of other passcode, whether it's they shoot you an email with a code, or they text you, or call you with a code. It's just an extra layer of protection. It might be a little annoying at times, but it's worth it. Not opening email attachments from unknown senders. Personally, I can tell you, received over, during tax season, a couple of emails that just say, here's my tax information from the prior year in an Excel file or a PDF file. I had never spoken to the person, didn't know who it was, wasn't familiar with them whatsoever. It's just, they're getting smart, and they're tailoring these towards your company or your mission. So it kind of seems like it might be legitimate, but it's really not. Do not click on links and emails from unknown senders or unfamiliar websites. So those are your click here to claim this. You see them coming from Amazon or something like that, which probably isn't really Amazon. Or Krista, myself, and somebody else at the firm received an email from an attorney that we were all familiar with and have worked with in the past. And it had something, and it looked very legitimate. It came from that email address. It had the signature and everything, basically saying, click here to open, view these documents. And Krista actually responded and said, I wasn't expecting anything, but I didn't open the documents. And they're even getting smart enough to respond and just say, it's legitimate, you can open it. They won't provide much additional information, but just, it's safe, you can go ahead and open it. So things are kind of, as I said before, they're getting smart, and they're getting creative, and they're making it seem like it's coming from a source that you know. So you might just not even think about the fact that it's not something you should be opening. I think the next one's really important. Avoid using unsecure Wi-Fi networks in public places, especially when we're all working remotely. If you have a laptop that you're taking around, going to the coffee shop or something like that to work, make sure that you have some way of accessing a private network, whether it's a hotspot or something that you have. making sure your home computer is protected. If you're logging in remotely to your organization, so if you have a secure organization at the like at the office, if your home computer is not protected just as well, and you're opening the door to hackers if your personal computer isn't secure as well. Sending emails with sensitive information on it. Sometimes people just share things that might have their social security number on it, whether maybe they're not thinking about it or not. Just be cognizant of not forwarding information even within, even in-house with information that's sensitive, like tax ID numbers or employer identification numbers, things like that. So we recommend, if you're not expecting something from somebody, especially if it seems like a legitimate source, don't open it. You can pick up the phone and call somebody to say, hey, did you send this? It looks kind of suspicious, just to verify that it's legitimate and protect yourself. Creating a security plan. These don't have to be intense, long procedures or anything like that. Just simply documenting some protocols. Cybersecurity policies can lessen the probability of attack from happening in the first place. Training your staff and establishing best practices. So anyone can accidentally introduce a virus or otherwise secure system by failure to follow good security practices. Like, for example, we just talked about opening suspicious email attachments, those kinds of things. Just simple user negligence and weak passwords, those kinds of things are the leading cause of cyber attacks and data breaches. So I know one thing that we kind of practice within here, as I mentioned with this email that I just talked about, is we'll share those stories in-house where it's like, I just got this weird email, just be careful, just things that are continuously just mentioning to your employees, just make sure you're not opening something that's unfamiliar and those kinds of small little things, because people just accidentally receive things and click on things without really thinking about it. Creating backups. So if you're on a desktop accounting system that's not backed up regularly, a lot of the cloud apps and accounting softwares, they're backed up pretty much every day, real time. But if you're using, for example, like a QuickBooks desktop, creating backups and saving them to a physical server or even in the cloud somewhere can help minimize any kind of interruption that may occur if your system gets compromised. So if you back up your data, you might lose a couple days worth of information, but not backing it up for a year, if something happens and you can't restore like your accounting file, you've lost a year's worth of information. Implementing security software. So this is your firewalls, your antivirus software. It's really important to keep your computer protected. Updating your operating system. So make sure if you're using like Microsoft, you're not on an outdated version. Conducting your regular updates to ensure you're not running anything a hacker can exploit. If you're on an outdated system, chances are if something happens, you're not going to get the support to be able to fix it. And I know everybody's nonprofit. If budget allows, hire an IT consultant, even if it's just somebody to come in every once in a while to look at your system and see if there's anything that's subject to any kind of risk that can help detect and repulse threats as they arrive, would be a good practice. So there's some opportunities in system integration. And what I mean by that is by connecting your accounting system. So if you use something separate for like a customer retention management system, connecting that with your accounting system, just kind of integrating those, anything to mitigate the manual entry from one system to another. Improved real-time visibility, so it minimizes risks and enables you to make critical decisions based on accurate information. Your process and efficiency, so employee productivity will improve if they are not having to take something from one system and put it in another. if that's kind of integrated and automatic, that kind of frees up time to spend on, your other fundraising efforts, things that'll further your mission. Lessens the administrative burden, allows users to work from a single system. If data is synced, it will not have to be exported or imported or replicated, and there's less chance for human error. And it provides better analysis, so faster access to current developments, figures, and other data, and it monitors more accurate financial reports and your budget to actuals. So when you have everything kind of integrated into one system, it makes it a lot easier and faster to see how things are going in real time. Opportunities, online banking and bill payments. So these are kind of your, if you pay your SMECO bills online rather than cutting a check, or, implement ACH processing versus writing checks. Some of the pros are reducing your fraud risk of using manual checks to pay vendors, reducing the risk of managing cash donations. So if you accept online payments through, a PayPal or something along those lines, it mitigates any kind of, cash handling risk. And time savings. If these things are kind of done automatically online, they're done really quickly. Some of the cons, you need proper segregation of duties to manage your fraud risk, and we'll kind of go into that a little bit deeper. Need proper oversight and need to set appropriate access controls. So, for example, in your accounting system, a read-only version versus full access, kind of tailor it depending on who's doing what in the accounting system. So it's really important to establish processes and procedures before making a change. Properly segregate duties. So if you're thinking about going from a paper check system to an online system, you really want to look at what controls you have in place now and what would change if you were to go online, just to kind of see if there's any additional risk with somebody having too much access to the cash, or just to reallocate duties. So one example, system integration, your bank feeds. So this is bank and credit card feeds. It's an online banking feature that lets you connect to your financial institution, so you can download transactions in real time. So it's literally connecting your bank account to your accounting system. Provides some really good benefits. It can save an enormous amount of time and increase the speed of doing business by keeping your accounts up to date. It increases efficiencies and cuts down the data entry process. And you can create rules, so to automatically code certain transactions to specified accounts. I think some good ones with those are, if you pay a monthly rent, anything, coded to that vendor will automatically go to rent. Your phone, your internet, and those kinds of recurring expenses. Don't really recommend rules for vendors that might have a multiple account coding. So for example, like if you go to Best Buy to, for some office supplies, but you also might buy computer equipment there, you don't want your small, office supplies going to like a computer asset account, or vice versa. If there's anything that can be posted to a couple different accounts, you may want to keep those separate. Even if you import your transactions, it's highly recommended that if you're cutting your checks, if you still have a checkbook that you're manually cutting and getting approved and signed, enter those into the accounting system the date that you cut the checks, so that the payments are posted on the correct date and to the correct account. So that's one of the risks we see with people relying on the bank feed. If you can just simply connect to your bank and use that to account for everything. If there's anything that's unclear that a vendor may not have processed yet, at the end of the year, that expense isn't captured in the correct year. So once payments are received, if you receive like a contribution, you should record that into your accounting system real time. And these bank feeds, they allow you to match things. So it's really not meant to eliminate manual data entry, but it can highly simplify it. So again, some of the risks, I just kind of mentioned not recording uncleared transactions, so your uncleared checks. When you do bring in, if you do not record these in real time, the checks post on the date cleared, not the date issued. So again, towards the end of the year, there's a risk that, you know, all of the checks that you cut are not in the correct year. And the same with deposits. They post on the date the amount cleared, not the date that they were taken to the bank. It's easy to duplicate transactions. You might enter something more than once and it comes into the accounting system and maybe the bank doesn't recognize where it's matched to, and then you just bring it in again. So it could definitely overstate some, you know, your expenses or your income if you're not paying attention to what's coming through the bank feed. And then sometimes there's too much reliance on the accounting system to code transactions accurately. They try to recognize vendor names and post them where they think that they should go, but it happens that a lot of times they'll post like an uncategorized expense, or you might get something where you have like a meal at a hotel. It says it under the hotel name. It's really travel expense, not the meal. Those kinds of things. One of the leading things that I personally see is if you receive multiple deposits. So if you collect, if you issue some like a invoice to a customer, or if that's how you track, you know, your donations, and then you receive them, but you take a bulk deposit to the bank, that bank fee is going to come in with just that deposit. It's not going to know, it's not going to recognize the breakdown of the smaller deposits that are with it. And that's kind of where we see people just pull it in. They'll say it's additional contribution income, and it's really duplicating, you know, your contribution revenue. This is just a sample company. I just kind of wanted to show what a bank feed would look like in your accounting system. This is QuickBooks Online. And this is where these top four that say uncategorized income or expense, those are typical we see. So just kind of the risk of just adding things just because they come through the bank feed. You don't necessarily have to add things. Like this example shows that they're selecting these transactions and they're excluding them. So if they've already been matched or you've already pulled it in and it's not matched to anything, you can actually exclude those from your bank feed. So it won't come into your accounting system again or anything. And actually over next to where it says in QuickBooks, there is another tab that lets you review excluded transactions. So if you accidentally exclude something, you can go back in and pull it back in. And this is where you can see that the accounting system, if it recognizes something, it will try to match it up. So you can literally just, you know, click match, and you can select all or select several at a time and accept it, exclude it, or modify them. So I just kind of wanted to show what a bank feed looks like in an accounting system, what you may see. So some system integration risks. If you use a separate donor management system, bringing those in, if you're recording things in your accounting system and your CRM and you're merging them together, there is risk of duplicate customer donor payments being pulled in. And the same with payment processing systems such as Square, PayPal, or Stripe. One of those risks is if you pull those in from, if you connect your PayPal account, if a donor gives you money, the PayPal takes a percentage. What happens is those contributions come in net of those fees. So your accounting system will never recognize it if you don't manually enter those fees in your accounting system. It's never going to match those up. And just by simply importing them, again, there's a risk of you're duplicating your customer payments. I personally think if you use PayPal a lot, maybe primarily for contributions, to choose either syncing the account or manually recording the account or manually recording it in your accounting system and adjusting for those fees. Or you could even bring them in if you want to import your PayPal transactions, and then maybe do a journal entry to, you know, record to break out the fees versus your contribution revenue, maybe on a monthly basis or so. it might be less cumbersome. Some control risks with system integration. These are kind of snips. These are also QuickBooks Online. Just wanted to show you, if you're setting up users, that there are different user types to choose. You don't want everybody having some kind of administrative right to be able to change anything and everything in your accounting system. So user types, they have regular or custom users. So you can give users all rights, no rights, limited rights. So if you're an AR, you really should only be limited to customers and sales. If you're in like an accounts payable function, you should really only be in vendors and purchases. And there really shouldn't be but maybe 1 or 2 people with maybe full rights. Company administrator has all rights to everything. They have access for all the reports, and they can edit transactions and everything. So your reports only, those would be good for maybe an executive director or somebody high up in an organization who really only wants to see what the results are. They don't have any access to edit or manipulate any transactions. They just want to log on and see, year-to-date information, or maybe budget to actual information. Performing financial statement review, assuming that they're not the ones preparing the financial statements themselves. And then there's also time tracking. So your payroll, if you have somebody in payroll, that they should really only be limited to functions that support the payroll process. So there's a bunch of stuff that you can customize in your accounting system. Just taking some time to look at that when you're setting up a user, to make sure that what they can see and do in your accounting system match up with their job descriptions.
Can I interrupt? I was just curious about what accounting systems everyone is using that's on the class.
So, we use Abila MIP fund accounting, which is great. I love it, but it doesn't really have that integration with other programs. So we do a lot of manual, or do everything manual into that.
Yeah, because you have a separate fundraising system, right?
Right, yeah.
And you don't have the option to do sort of like a feed or an import.
There, you can import into it. It's really complicated, and I haven't done it. And we've looked at it a number of times over the years, but I actually we have 3 systems, I guess. We have our donation receipt system, then we have our donor database, and then we have our accounting database, and they're all 3 separate. We're looking at integration between the donation database and the donor database. That's coming down the line, maybe. But what a control freak I am. I like the opportunity to look at each set of data and make sure that it really is going where it should do, because that's one thing you have to be careful of, is if things are feeding automatically, and you don't know they're going to the wrong place, you're never going to find it. So, but that's just me.
I mean, we've had clients come to us. Their technology is so prevalent now that they set up a new company, a new accounting system, and they see all these sync options. And so they're syncing to PayPal, to Square, to their bank, to their customer database. And I've seen them where they're actually like tripling their income in their accounting system because it's coming from all these different directions and it's just duplicating and building up. So their financials are just totally unreliable. That's what we're saying, like system integration is great, but you need to kind of walk through it and make sure it's doing what you want it to do. What about, is anybody else doing any sort of like bank feeds or downloads?
I liked Roseanne's comment in the chat. She says cash accounting, very primitive, so you may have some tips for those folks who are still, using the abacus to figure out how much money they have, that sort of thing.
Yeah. Roseanne, are you doing like in Excel or how are you guys keeping track of your records?
I'm not even doing Excel. We just copy the receipts and write them in. I have someone who, does these sheets for me, the fiscal sheets that are required.
Okay.
And I guess she uses Excel. I'm sorry. Yes. Is that bad? I don't even know how to use Excel. It's terrible.
Well, I mean, you don't have to know how to do everything, but you should rely on other people who do have those skills. We do recommend for any organization or business to be using some sort of a double entry accounting system, because that makes sure that your books are balanced. We have seen a lot of issues when people are just using Excel, where there's manual entry errors. And at the end of the year, you try to make sure whatever went in your Excel sheet ties into your bank balance, and you can end up looking for hours for what's causing the difference. But as you grow, that's typically small organizations start out doing something like that, and then they move into a smaller accounting system, and then maybe scale up as they get bigger.
So Carmela is heading up a new startup organization, Ivy and Pearls of Southern Maryland, tied to the sorority that's been established for years. But I'm interested, Carmela, what sort of system are you using, or for tracking incoming funds and the like?
Okay, for right now, we're just using Excel.
And Raja with the foster children's program, and you may be tied in with Colby Stewart. Is that someone who's in your organization as well?
But no, I'm not. I'm not sure. I'm by myself in my organization. It's just me right now.
How are you keeping track of your income and expenses?
Well, I plan on using Excel. I got I found a little sheet that I was using, but I think it's compatible with Excel, but we haven't even gotten to that point yet. We're just now getting all the legal stuff, like the articles of incorporation and things like that done. So we haven't gotten any donations or anything yet to keep track of that.
Okay. Well, like I said, we do recommend a double entry accounting system, such as QuickBooks or Xero or something, to make sure everything balances and you're keeping track of everything. If you guys have any questions on that, we're here, we can answer them. All right, sorry, Jenna, take it away.
No, it's okay. No, and I just wanted to mention, I was actually going to bring it up a little bit later, but I can mention that now, just in case I forget. We have, if you as a nonprofit are looking into maybe what accounting systems are good for you, or there's actually or other software that actually may be provided at a discounted rate to a nonprofit. TechSoup, TECH Soup is a really good resource. I reference a lot of QuickBooks online because that's where we have a lot of our nonprofits and small businesses kind of turning to. That's kind of where we're seeing things going. So they provide these services at below normal rates to like a small business or such. So some discounted rates, or maybe even some free products, possibly with limited abilities. But I think it's not a bad idea to check out when you're starting up, just to see what's out there. Mm-hmm.
Okay, my question is about QuickBooks, because I understand. Because I've used it with other organizations, but if you don't understand QuickBooks, it's kind of you put garbage in, you get garbage out. So you really need to understand QuickBooks, and if you don't have a good you don't have your hands around it, if you can't get a good grasp of it, you don't get a good report.
Right.
I would agree with that. But also, we're going to talk about fiscal responsibilities. I mean, as a nonprofit, as a tax exempt organization, you are responsible to making sure that you're properly tracking your income and your expenses and reporting them on your 990 each year. So to that, I would say then if you don't understand it, you really need to recruit somebody or hire somebody who does. Or have a board member with a finance background that could help with that.
I'd absolutely agree with that. I came from a public accounting background, and I can't even begin to even estimate how many clients I had to go back to basics with QuickBooks, like basically start again, because they'd set like every expense account up as a bank account and things like that. And it was, if you don't understand double entry and where the other side goes, because you can't see it in QuickBooks when you're putting an entry in, you really do have to do that. I mean, I'm not trying to sell a service here because I'm not doing that, but yeah, you really do need to get someone to set you up with it correctly in the first place.
And that is where, I mean, a lot of nonprofits that are just getting off the ground, what they do is they recruit somebody with a financial background to serve as a board member, maybe their treasurer, to help get them there until they get to the point that they can afford to pay somebody for that service or train up somebody to do it. Yeah. And even just with some small like how-tos and stuff like that, I find myself, I mean, I don't know every single aspect of a QuickBooks, the software, but if I don't know something, YouTube is actually a great resource. I YouTube a lot of stuff just to say, this is where you start, or this is where you find this. Kind of strange to YouTube a bunch of stuff, but I find it pretty helpful. Just for small, how do you do this in the system kind of thing.
Okay, you made a recommendation for TechSoup. Is that what you said?
Yeah.
TechSoup.
Yeah.
TechSoup. Okay.
Yeah, and they
Yeah, we have a lot of clients that get their software through there at discounted rates. Yeah. It's geared towards providing this to nonprofits.
Yeah, it's this is Rosanna. I've used it for years, sort of, but somehow I haven't been able. When I registered, I did something incorrectly, and because of COVID, I haven't been able to get hold of them. But what I found was you can TechSoup will let you know. You just sign up for them, and they'll let you know what's out there, like she said. But what I found is I could go directly to the company. Like we recently got the Adobe service, and I just went directly to the company. I didn't have to go through TechSoup. And I did, you have to upload your 501c3 determination letter and some other things, and they'll give you the discount. But I don't know. I just haven't been able to get hold of them, but it's a very good recommendation. TechSoup does really keep you up to date with what's going on out in the tech world.
Yeah.
Nonprofit Institute also has a website where we post resources for nonprofits. So it'd be worth your while to take a stroll through that information. It's always updated if there's a fresh new idea out there. And hopefully we'll have some resources listed already, including TechSoup, that get at the financial management aspects of running an organization.
All right. So another big part of system integration is the use of apps. So that's the process of enabling independently designed applications to work together. If you're using an online platform, there are literally thousands of apps, and they're growing exponentially by the minute, I feel like, that could possibly integrate with your accounting system. So if you, and again, I'm going to keep referencing QuickBooks Online, but if you have, we're inventory heavy, QuickBooks is not the best
QuickBooks Online is not the best with inventory tracking. There are different apps out there that you can track your inventory that can pull, merge in with your QuickBooks, your accounting system, so things like that. You can really tailor your accounting system to fit the specific needs of your organization. Streamline workflow, speed up approval process. So this is where, if pre-COVID, if your process was, I'm going to write a physical check, attach it to a purchase or even a purchase order, and the flow that goes around the office. If you're not in the office, is that significantly halting, things getting approved and getting paid, by maybe using some kind of online application where people can access that remotely and just through the internet, to approve and timestamp and pay things. It could greatly speed up that process. So even though you're not physically able to be at an office, you can still get things done. Minimize retention of paper files. So again, there are systems out there, or applications out there that you can use as document retention, so you don't have paper files sitting all over the office just taking up space. You can scan those in or even snap a photo with your phone and code that, provide a description of what that charge is. We see one of the big things is credit cards. People tend to either lose credit card receipts or don't get them to begin with. So anything that's kind of easier just to kind of snap a photo real time and then not have to worry about bringing the piece of paper in, could help. And again, access from your mobile device. So a lot of these apps out there you can download to your phone and have access from anywhere you are at. Oh, let's see, that's something. No, okay. So I just wanted to throw out some examples that are out there, some that are commonly used that I've seen. I know there's plenty more out there, but I just kind of wanted to hit some of the bigger ones that you may recognize. So time tracking. There's T-sheets. So your employees can track time from anywhere that they're at using a phone or a laptop or an iPad just by having the app. And a supervisor can, if for some reason they charge you the wrong job, they can edit the timesheet. They review your timesheets and approve them before payroll is processed. So all that can be done remotely rather than having, your paper timesheets, getting those to your supervisor, getting them signed. Sometimes, obviously, you want to pay your employees, but maybe having these things go around the office via paper kind of slows down that process. And T-sheets even comes with GPS location tracking if you're interested in that kind of stuff. So if you have an employee that says they're here, you can look, and if they're not there, they're clearly not doing what they're supposed to be doing. Expensify is another big one. So that's receipt tracking and expense management. It has a few things in this one program. So they have receipt and mileage tracking, expense reporting, and company card reconciliation. So again, like I said, you can snap photos of your receipts, and it's automatically transcribed on the expense reports. And if you link, a credit card to it, it'll match those receipts up with that credit card so that you have, all the supporting documentation you need for your credit card. Bill.com. So this is more of your online bill pay process. Invoice is, they could be automatically emailed by a vendor to bill.com to some, you specify a web address. It'll automatically go in your system. Somebody can go in there and approve it, code the transaction. And there's even payment options so that you can almost virtually get rid of paper checks. So everything can go to ACH. There's different administrative roles. So, you can be set up as a supervisor who approves versus, maybe an employee who just uploads or like accounts payable that just uploads the invoice. And even separate auditor access with custom policies. So we want to, their timestamp. So as an auditor, we want to see that it's approved by somebody who's authorized to approve, and that sort of thing. TripLog is a popular GPS mileage tracker. So for people who, are out of the office on business work, they don't have to come back and, look up a MapQuest to find out, how many miles it was from here to here. It's something that can be downloaded to your phone. It will track your trips. And then you can simply say whether it's a personal trip, a business trip, commuting. So it provides pretty accurate reports for mileage purposes. And then Pay Tracker, I honestly haven't, I'm not very familiar with this one, but it seems pretty neat. So this syncs your ongoing and historic, your PayPal, that's supposed to say Stripe, not Stripe, and Square transactions. Offers integration, synchronizing online payments with processor fees and expenses. So basically, it sounds like it'll take into account that there are fees associated with those platforms, and it will reconcile those out so that when you import it into your accounting system, they are imported correctly. Some internal controls for nonprofits. The internal controls, they're financial management practices that are used to prevent misuse and misappropriation of assets, so fraud or theft. They're generally described in written policies that set forth the procedures that the nonprofits will follow, as well as who is responsible. So establishing a policy, just kind of getting the ball rolling here. Starting with the basic internal controls that address who has access to nonprofit's bank accounts, who has the authority to spend money on the nonprofit's behalf. So if your nonprofit uses checks, who has access to the blank checks, who signs them. Same with contributions. If you receive checks in the mail or people come by with cash, who receives these contributions and who is responsible for filling out the deposit slip and making the bank deposit, who then records these transactions into the accounting system, and who receives and reviews the monthly bank statements, who reconciles the bank accounts in the accounting system. So all these things are just things to think about, just kind of the processes through your organization. Generally, we see if the same person is responsible for all of these functions, you have a pretty big deficiency in your internal controls. You shouldn't have somebody with absolute access to the money of a nonprofit and nobody else even reviewing anything behind them. It just kind of opens the door for risk of theft and fraud. Some more internal controls, so segregation of duties. Just noted, the person responsible for logging checks received in the mail should not be the same person responsible for depositing the check. The person responsible for preparing vendor payments should not be the same person who approves the payment and signs the check. The person responsible for preparing payroll should not be the same person responsible for distributing paychecks. And a separate individual should receive and review the unopened bank statements prior to the reconciliation. So we know that, with nonprofits, there are some that are really small. Chris will kind of go into that a little bit more in detail, because sometimes, you're not going to have 10 people in an organization to be able to segregate these duties appropriately, but there are things that can be put into place. So just asking yourselves, when you plot out who's doing what, just ask, are there any weak links? If so, where they might be in this chain, what assets are most likely to be lost or stolen, and how can we better separate duties to protect ourselves better. So even in a sense where an organization has a little personnel or one person responsible for vendor payments, if you simply establish a dual signature policy. Now it's not enforceable by the bank, so even if you don't have two check signers, the bank's not going to necessarily not cash a check. It's more of your policy to say, somebody else is looking at this and taking responsibility for this payment as well. These are just some examples of some internal control policies. Some might seem kind of common sense, but they're there anyway. So policy requiring that employees may only be reimbursed for expenses that are approved in advance. So if I wanted to go out and buy a printer, making sure that, I'm getting a purchase order prepared that approves me to purchase that printer, rather than you just go out and buy it and hopefully getting reimbursed for it. So establish a segregation of duties policy. That's kind of what we just talked about, just kind of plotting out who's responsible for what and making sure that it's appropriate for your organization. Periodic review by an objective person of the list of vendors receiving payment from the nonprofit. Policy to keep all cash in a locked drawer. So if you have like a petty cash box, or maybe somebody's only there once a week to deposit things, making sure that if there's any cash, keeping it somewhere locked so that people can't physically go in and take anything. Making deposits shortly after you receive payment. A policy to conduct a background check of employees who handle money prior to hire, and even some periodically throughout employment. This one seems pretty basic. When you're not there, lock the door. Making sure, if nobody's there to see if anybody comes in and out, just locking the door can, will prevent people from coming in. Establishing a finance committee to periodically sample and review transactions. That's one, as auditors, we recommend to a lot of our nonprofit organizations that just, take some time, whether it's monthly or quarterly, to, sample some transactions and make sure that, it's signed by the appropriate person, make sure the vendor, the payment agrees to the supporting documentation, just those things. And these are kind of just diving a little bit deeper into some transaction controls. So in your cash disbursement cycle, review the invoices. Department heads or somebody with knowledge of the charges prior to being entered into general ledger by the accountant. The check signer should review the related invoices for approval when we're reviewing and signing checks. So making sure that the check is made out to the same company that the invoice is saying. Don't just take it for face value and not actually look at it and just sign it. Review employee reimbursement. So those should be reviewed by some kind of supervisor or superior. We kind of talked about payroll reports. So somebody else should be reviewing your payroll reports prior to paycheck distribution, just kind of looking at it for reasonableness, making sure somebody's not receiving a salary that's way above their approved rate, or taking some strange deductions, the payroll deductions, those kinds of things. And as we kind of talked about before, limiting the accountant authority. So prohibit the accountant from being the authorized signer on checking investment line of credit accounts, if possible. Your cash receipt cycle, so reviewing your contributions for donor restrictions. Significant contributions should be reviewed by the accountant and the development department employee or executive director to identify donor restrictions. So those are, if I give your organization a check and say this should be used towards, to fulfill this mission, then you want to make sure that you're spending that contribution accordingly. So analyze your donor restricted contributions, at least on an annual basis. They should be analyzed to determine if the purpose restrictions have been met. Review your expense report to validate the costs were incurred. If you don't have too many missions, you could do this simply by, if you're using accounting system, implement a class tracking. So I could say, I'm going to donate this and it needs to be used towards mission X. You can classify that transaction. It's going to show up still in the same contribution line item as everything else. So you can see what expenses have been charged against it. It's just kind of an easy way to account and make sure that you're spending your money appropriately.
I wanted to share an example back on the reimbursements that you were talking about, because I'm familiar with an organization where fraud was occurring, and the individual would have a reimbursement form and have some receipts stapled to it, but not all receipts stapled to it, and was getting it signed off as approved, and then that would go to the bookkeeper, and with that signature they were then issuing a check. But it was like neither side was looking thoroughly at that a reimbursement form, and a lot of money was lost. And that was a very simple way for this person to commit fraud. So,
Yeah. And we see that with, and yeah, when we mentioned credit cards, just by saying, you know, I can't find that receipt, or, you know, I'll try to get that to you, and just time goes by, and then you just might just let it go. It doesn't seem like a whole lot, but it could be, you know, if I'm ordering something from Amazon or something, you know, what, I don't have something to show what it's for, I could be buying something personal for myself pretty easily. And if they're pretty lax about getting those receipts or, you know, printouts from online, then, you know, makes it easier for me to purchase things, you know, that are personal in nature, not necessarily for the business on a business card. So reconciling your donor database to the general ledger. That should be performed at least annually and investigate the variances. So if your CRM system say that you received $100,000, your accounting system says you have 200,000. So that's kind of one of those instances where if things are duplicated, if you're using a bank feed, just making sure that the numbers are agreeing between your systems. Again, sometimes we rely too heavily on maybe a bank feed, or that what you put in wasn't coded correctly, and that kind of thing. So just taking a minute to make sure that your support agrees to what's in your accounting system just provides some additional like checks and balances. And then your month-end close and financial reporting. So reviewing your monthly statements outside of the accounting department. Just a review of your monthly bank reconciliations and statements should be performed by someone outside of the accountant position. So maybe an executive director, if your treasurer is not the one that's performing the accounting function, maybe the treasurer, since they have the financial knowledge, background. Creating a month-end checklist. So creating a checklist that lists all of your controls, such as, you know, who does the bank rec, maybe preparing the financial statements, your budget to actuals, if they're responsible for posting journal entries, review the check register, payroll reports. So just having this kind of listed out in a 2-column format that allows for, you know, me as a preparer to sign off and say, I did this on October 20, and, you know, maybe Krista reviews it and signs off on the date that it was reviewed. So just keeping that retained separately in a file that, you know, these things need to be done on a monthly basis, and that they were reviewed by somebody else. And then reviewing your monthly financial sheets, the statement, review your monthly financial report, your balance sheet, statement of activities, and budget to actual, such as supporting documentation. So, for example, if you have a line of credit and you know you have like a $100,000 balance on your line of credit, but your accounting system doesn't show anything, there's a chance that you just posted maybe a draw to revenue or something like that. So just kind of taking anything, you know, a loan, making sure your loan balance agrees if you have a loan. So I'm going to talk for a bit about fraud risks to nonprofits and fiscal responsibilities and some recommendations. I'm going to expand a little bit on the segregation of duties and internal controls that Jenna talked about. Because like Rosanna said, this is all very important stuff when you're operating a nonprofit. This is a quote from the Association of Certified Fraud Examiners that I think really kind of touches upon the fact that the damage of a fraud to a nonprofit is not necessarily just the amount of money that is stolen or misappropriated. It also can be the blemish on the organization's reputation, as it says here. If people are giving their hard-earned dollars to a charity, and then they learn that that charity didn't have controls in place and money was stolen from them, they may not want to continue giving to that one. They may want to give to someone else that they feel has better processes and procedures and more transparency in place. So that's something to consider as you set up your procedures. So along that line, I had a little YouTube video I was going to play. It's just like a little 2-minute. Can everybody see the YouTube?
There's a huge amount of fraud in nonprofit organizations. In fact,
Are you guys able to see the YouTube?
You can see it if you can turn up the volume, that'd be great.
Okay, I just wanted to make sure it went on the right screen.
it's estimated that it's approximately $40 to $50 billion per year by the New York Times. And it's also estimated that it encompasses approximately 20% of all charitable organizations. That's 1 in 5 charitable organizations. Fraud is not discovered in nonprofit organizations for a variety of reasons. One of the reasons would be that there's quite a bit of turnover in nonprofit organizations because you have a lot of volunteers working in nonprofits. Another thing is management. Usually the layers of management are not nearly as deep, so that you don't have the programs and the processes set up to be able to detect fraud. Then they won't have internal audit staff. They also won't have outside auditors who come in annually and perform an investigation to determine if the books and records are correct. Fraud is reported nowadays because beginning in 2008, the Internal Revenue Service required that what they call significant diversions are reported in the 990 annual tax return. However, it's very hard to find, and usually there are very few details. Also, management doesn't necessarily want fraud to be reported simply because it may affect giving to the charitable organization. It is not really any more difficult to investigate fraud in a tax-exempt or nonprofit organization than it is any other type of organization. The problem is that law enforcement has a substantial amount of work to do, and they don't have the personnel to investigate every allegation of fraud in a nonprofit. Secondly, the nonprofit itself doesn't usually have a budget that would allow it to spend the money for professionals to come in and perform an investigation. With fraud being so prevalent in nonprofit charitable organizations, it is extremely important that an individual do their homework, to do the research. My recommendation would be to go to guidestar.org and see if that organization is spending its money on its charitable purpose.
So what I found interesting about that was actually 2 things. One is that he pointed out that there is a question on the 990 now, ever since 2008, that asks if you had a significant diversion of assets, and you need to check yes if you did. So that's now out in the public domain. If you did, even if you didn't make it public, it's on your 990, and your 990 has to be made available to the public. The other is his encouragement for donors to look on GuideStar before donating, and to look at an organization's 990 to see where they're spending their money, and to see if that question is checked yes. So we're going to talk a little bit more about the 990 and kind of using it more as a fundraising tool instead of just seeing it as a compliance requirement a little bit later. But I just thought those points were good ones to make. I'm going to try to zoom in on this a little bit. So the Association for Certified Fraud Examiners just recently released its 2020 report to the nations, is what it was called. It's on their website. It's all about fraud. They investigated frauds that had occurred all over the world. But there is a section on it that just focuses on nonprofit fraud. And so I thought these were kind of interesting. The top 3 control weaknesses in nonprofits is lack of internal controls, which is pretty broad, lack of management review or management oversight, and then even when controls are in place, people overriding them, which means you may have great policies and procedures written down, but if you're not following them, they're not actually protecting your organization from anything. And so nonprofits, because they have fewer anti-fraud controls in place, they are more vulnerable. And so here's the kind of some controls that for-profits have compared to nonprofits, like surprise audits, fraud risk assessments. We're going to talk about that a little bit more. Management review or oversight, and then an internal audit department, which I don't know really any nonprofits that have an internal audit department. What we do see a lot is the board has a finance committee or an internal audit committee that will meet quarterly and kind of have the accountant or the treasurer, whoever's keeping the books, print them a report out of the accounting system, and they just pick a sample of transactions and they trace them to the supporting documentation and make sure that if the sample transaction is a check disbursement, they make sure that what's in the accounting system, who it says it was paid to, and the amount agrees to the vendor bill. That can be a really fantastic control, and it can be done by volunteers. It's one way when you have a small nonprofit that you're not really able to segregate duties as well as you should, that you have, it's called like a compensating or a mitigating control, where you have some oversight come in after and look at it. Because honestly, sometimes the best control that you can have in place is just somebody knowing that somebody else is going to be looking at what you're doing. That can be one of the most effective preventative controls. How fraud gets detected at nonprofits, tips is the #1 way of detecting frauds. By and far, that's not just nonprofits, that's across the board. Internal audits, management identifies it during review by accident, you just kind of happen upon it. And then examination of documents, which I don't know what makes that different from management review. But then this one. So the study looked at 191 nonprofit cases. The median loss was 75,000. The average loss was 639,000. So this can really, and that kind of speaks down here. The size of the loss is usually directly impacted by the level of the position that perpetrated the fraud. So when it's owners or top executives, top management, the fraud's usually larger in size than managers or supervisors or the employee level. And it's usually because of what they have access to. Like an entry-level employee may be able to commit payroll fraud, like padding their timesheets or putting some personal expenses on an expense report or a credit card. So it accumulates to a smaller amount, whereas an owner and executive may have access to the investment account and can make transfers out of that to their personal account and cover it up in some fashion. This is a list of some nonprofit schemes by the most identified during the study. Corruption is the top one. That's a pretty broad one. It usually encompasses something else on this list. But typically corruption usually, especially in nonprofits, involves conflict of interest. Like you're paying your brother for services that he's not actually performing, or you're paying him above market value. That's kind of corruption and a billing scheme at the same time. Or expense reimbursements, you're reimbursing expenses that didn't exist to another coworker or to yourself. So it's so corruption usually is married with one of these other ones. But by and large, billing schemes is what we see the most kind of, I guess, combined with expense reimbursements with nonprofits that we've experienced or uncovered fraud at or aware of. Skimming is where you take the cash out before it ever hits the accounting system. And then cash larceny is when you take it out after it's hit the accounting system. Payroll fraud is pretty common, more like padding timesheets. We have seen, Jenna and I are aware of, there was a company where they were taking excess, Jenna, what was it? They were making extra health insurance payments, right?
Yeah, it was in the deductions, like payroll deductions. There's some kind of manipulation, or they were taking excess and they were paying themselves, I believe.
Mm-hmm.
They
So it was showing up as like a health insurance deduction, but it was actually going into their personal account. Has anyone on the call had any experience with fraud that they'd like to share?
It's Rosanna. I had a terrible experience that had nothing to do with me, except that a good friend of mine who was one of our, I don't know how to put it. We do a behind bars conference at the Jessup Women's Jail every year, and she was in that along with some other organizations that I've been part of, and she was murdered by an employee of her husband's nonprofit, and her husband had built a nonprofit from the zero that I started at to billions of dollars. It had to do with cystic fibrosis, and they had just found out that he was skimming, and it was pretty, they were actually going to deal with it internally, and they were just more or less going to ask him to pay it back or whatever. And he went to her home, went to their home and murdered her, and then turned around and killed himself. It was one of the most horrific things that I've ever been through.
That's really awful. I'm sorry.
Yeah, but it had to do with, it was so weird because being a nonprofit, and you're going to try to do what you can, to get things right. And all that the boss had done was he had called him in and said, we're going to need to talk about this, and the fellow walked out and murdered his wife and killed himself, and obviously never returned. It was horrific. So you have to be really careful.
Well, so we have one of the partners here, Bob Askey, is a certified fraud examiner. It's similar to like a CPA certification. He has to do a bunch of training and take a test. But he would say that he would recommend speaking to the police before approaching somebody, and possibly even having the police there to have that conversation. I think that should be maybe considered depending on the level of the fraud that you're finding and what the risk is of how they might react. But that's just truly awful. I'm very sorry you went through that.
Okay, so I was incoming treasurer for this organization, and when I came in, the president gave me a new checkbook, and so I'm thinking, well, what happened to the other? And none of the other records from the previous treasurer, just the new checkbook. And so I had no idea that the previous treasurer had taken like $1,000 to pay some donation that she was supposed to, that she had volunteered for another organization, and she paid it out of that checkbook. And the reason why she could get away with it is every time it was a monthly meeting, but she never, oh, I forgot the checkbook, or I forgot to the report, or it was always I forgot. And it was because she had skimmed, written that check for $1,000, and she didn't want anybody to see it. And this was a nonprofit. It was, so whenever I'm in a meeting and somebody says, oh, I forgot that I might look, I'm wondering, okay, now what's going on when they don't make a monthly report? Because you should make a monthly report. You should tell the people where the money is going. So that was my experience. I thought, you need to make a monthly report, and you need to require that the report be produced. If it goes a month or two and you don't get a report, something is wrong.
Well, beyond that, a great way to detect something like that is to have the president. So that was the treasurer that did that, right?
Yes.
Okay. So one control that could be put in place would be to have the bank statements go directly to the president and have him review the bank statements and the canceled check images each month before giving them to the treasurer to do bank reconciliations or whatever. So having
That's
that level
true.
of oversight, that's one of our number one recommendations, is if someone outside of the person keeping the books is not looking at the bank statements each month, that we always recommend that. And you want to be looking at canceled check images. These days, those don't always come with the bank statements. So then we recommend that you have online access so you can look at those, because that's the only way you're truly going to know who the check was written to. What else? The other thing that we see a lot is now that online banking is becoming more prevalent. And this is where Jenna was talking about, you don't want to just go from manual checks to online banking without considering what levels of authorization are you losing by doing that. Because maybe with paper checks, one person prepares the check and then somebody else signs it. If you go to online banking, you don't want to lose that level, that signature, that approval, so that one person has too much control over your online bank account. But we do see people that kind of jump into that too fast and don't think it through and don't put the processes in place. And then they're maybe paying the SMECO bill for the organization and then their own personal SMECO bill, or the credit card for the organization and their own credit card. And it doesn't always, if you're not carefully looking at that bank statement, like these are vendors you're expecting to see on the online bill payments. But if you're not carefully looking to see that, oh, well, there's two, there should only be one, things like that slip through the cracks. So review of bank statements is, I think, vitally important by someone. If the treasurer is keeping the books, the president should be looking at it. If you have an accountant keeping the books, then the treasurer should look at it. But it should be somebody that's not doing any of the data entry or presenting the reports to the board.
Another example of fraud I'd heard about is the organization had a card for Staples for office supplies. And the individual was using it to purchase phones and laptops and any number of things that weren't, approved purchases. And that went undetected for a while because it wasn't necessarily odd to see a bill from Staples, but it was how that card was being used that was absolutely fraudulent.
Yeah, so in that case, not only do you want to look at bank statements, you want to be looking at credit card statements for any cards that they have and actually looking at the purchases, matching them up with the receipt. We've seen more people use a Staples card to buy gift cards and then use them personally. So same thing, a Staples charge on a bank statement doesn't look that odd. But if you're not looking down on the details, you won't see what's actually being purchased with it. And another one, you had mentioned reporting to the board. We had another nonprofit that identified fraud because they had a new treasurer, and he realized at one of the board meetings that the reports that the president or the executive director was giving to the board were created in Excel instead of coming out of their QuickBooks accounting system. And he was a CPA, he had a good background in fraud and internal controls. And so he put his foot down and said, I want to see the reports from the accounting system. Why would you be creating reports outside of the system that you're using? So then at the next meeting, she didn't show up. So then they kind of took over the accounting system and did a whole investigation. And we found that she was cutting herself checks like every 3 days and putting them in payroll. That was the big one. She just kept issuing herself payroll checks. But she had some other personal expenses running through there, but she just wasn't giving those reports to the board. So you want to make sure that the reports are coming out of the accounting system, definitely, for sure. And again, looking at the bank statement, because that would have caught it as well, seeing multiple paychecks to the same person. So here, like I said, we're going to give you I'm not actually going to open this, but this was a pretty interesting research paper, an overview of fraud in nonprofit organizations, the appropriate approach to prevent it. It's from 2018. It talks about some of the different types of fraud and some different controls that you can put in place to prevent them. So everyone will get this slide deck, this PowerPoint, so you can look into that at your leisure. A New York Times study found that 40 to 45 billion was lost in fraud in nonprofit organizations over a 3-year period. And then in 2013, that jumped up to 67 billion just in 1 year. So that's pretty crazy. It's becoming more prevalent. The Association for Certified Fraud Examiners estimates that organizations have lost total revenue of approximately 5% due to fraud, which they estimate when they project that on a global spectrum about $3.5 trillion. When we were talking about different types of fraud, 90% of fraud committed by employees in management comes from asset misappropriation. So like I said, billing schemes is pretty common, or skimming donations before they get recorded in the books, things like that. So as that guy mentioned in the video, things that make a nonprofit more vulnerable to fraud. There's disproportionate control on their executive director and small staff. A lot of times you're operating with a staff of 1 or 2 or just a couple. So it's hard to segregate those duties, but that's where you kind of need to get creative with it. That's where your board gets more involved, really. So you segregate some of the duties, you add layers of oversight. If you just have a staff of 1, you have the treasurer more involved in looking over what the executive director is doing. And then you even have the president involved, maybe to keep things segregated from the treasurer. Or you have that finance committee that comes in each quarter and looks over the books for anything unusual. Nonprofits tend to allocate less resources to accounting and internal controls and financial oversight. A nonprofit's mission is inherently non-financial. So the financial measures aren't typically monitored as closely as the program objectives, and not monitored as closely as for-profit companies who have the profit objective. Often they have a volunteer board of directors with little or no financial expertise. We strongly recommend requiring at least 1 board member have a financial background. It doesn't have to be accounting. It could be banking, finance, just someone that can read a financial statement and really understands anything unusual in it. There's nonprofits have non-reciprocal transactions, such as contributions. Those are easier to steal than exchange transactions, which is what for-profit companies have, because in the exchange transaction, the customer is getting something in exchange. So if you don't give them that one thing in exchange, they unravel faster that way. And nonprofits are really concerned with negative publicity because, as we talked about, the cost of a fraud in a nonprofit can be much more than just the amount of money stolen. So that means that they're less or reluctant to report or discuss when the fraud occurs. We've seen this a lot actually with clients of ours where they try to deal with it internally because they're worried about what it says to the public. My position on it is I think it would be better to come out and say, hey, we had this unfortunate thing happen, but we had controls in place to detect it, and we're going to put even more controls in place to prevent it in the future. I think that's better than trying to cover it up and having, sometimes it just comes out on its own anyway.
To that point, if the police are involved, it may be picked up as a story in the crime beat. You know, so all of a sudden you're not in, you're not ahead of the messaging on that. And it can be quite startling for a nonprofit.
Yeah, I think that it's definitely better to get ahead of it and to lean on the fact that you found it rather than focusing on the fact that it happened in the first place. How does fraud happen? This is called the fraud triangle. The theory is that there's 3 things that need to be in place for fraud to occur. There needs to be a pressure, an opportunity, and rationalization. We'll talk a little bit more about that. So the pressure, so someone has to, typically the person that's committing the fraud experiences some type of pressure that motivates it, such as, like here it says maintaining a high standard of living, paying off credit card debt. A big one is medical bills, gambling, drug problems, things like that, where they have some outside financial issue that they need to address. Most employees who commit fraud are first-time offenders, and they don't even see themselves as criminals. They think that they are in unfortunate circumstances beyond their control, and they expect to, a lot of times they tell themselves it's a loan, they're going to pay it back. And this is their rationalization there. So to commit it, not only do you have to have the pressure, but you have to be able to rationalize it to yourself, to justify it. Sometimes it's just that they're underpaid and unhappy. Sometimes they think that along with being underpaid, that the employers can afford it. They won't even notice it. They're making so much money. That's not really common in the nonprofit world, but in the for-profit world, that does happen. A common one is everybody does it. We're going to talk a little more about the 10 at the top. And sometimes they just don't see any other solution. But then the third piece that has to be there, and this is really the only piece, well, not the only piece, but this is the piece that organizations have the most control over, is the opportunity. So without opportunity, even a motivated and rationalizing fraudster can't commit a fraud. So poor internal controls and weak management oversight is what creates the opportunity. And here, like I said, the opportunity leg of the triangle is really the best way for an organization to prevent the fraud, because it's within the organization's control. So common types of fraud, we kind of looked at this with that chart. Billing schemes is really common. That's where you pay fictitious vendors. You cut a check to your neighbor or your brother-in-law, or a lot of times you'll set up a shell company whose name is very, very similar to one of your top vendors. And if the person signing the checks isn't looking carefully at it, they just sign it away. We've seen that one happen before. Credit card schemes, personal charges on credit cards is common. Skimming is a big one for charities that do cash fundraising. Cash donations is a huge fraud risk. I know organizations or CPA firms that won't even do audits of churches because of the risk of skimming out of the donation baskets. Payroll schemes, padding timesheets and expense reports. And then, so those are all like misappropriation of asset frauds. And then there's also financial statement fraud, which is another type of fraud, and that's usually committed more by the top management, misclassifying restricted donations or misclassifying expenses when reporting to funding sources or grant reimbursements. A lot of grants out there are cost reimbursement. So maybe you didn't spend as much on your grant program as you anticipated, and there's still some funding available. So you code some of your other expenses from another program to that grant and get reimbursed. That's financial statement fraud. Which leads right to here. So it's most oftenly done by upper management. Another one, like Jenna talked about, restricted contributions. Maybe you you raise money for a certain purpose, a certain program, but you just record it as unrestricted and use it on management and general expenses, general operations, rather than what you told your donors you were going to spend it on. Like I said, cost reimbursement grant programs have a high risk of misclassified expenses. Over understating financials to meet a budget or submit a proposal. Okay. Hiding conflict of interest or related party transaction. That kind of goes back to the corruption that we were talking about. That's why a lot of A lot of organizations have a procurement policy in place where if the purchase is over a certain amount, you have to get like 3 quotes. If it's over an even greater amount, you have to go out request for proposal. We do recommend conflict of interest statements that nonprofits get those from all their board members to identify any business relationships that they have, or potentially any like familial relationships that are related to the entity. So ways that we can prevent fraud. One of the top ways is the tone at the top, which just sounds kind of like a buzzword and we hear it all the time. And what does it really mean? It's top leadership's commitment towards openness, honesty, integrity, and ethical behavior. It sets the expectation of the organization and it demonstrates the organization's values. The tone at the top has a trickle-down effect on staff. A poor tone at the top most likely leads to employees overriding controls. So let's get one. How to improve your tone at the top. Communicate, promote, and display your ethics and values. We recommend having a written code of conduct, which you can have all of your employees sign when they get hired as a way of acknowledging it. Frequent staff meetings. Here at ASCII, we meet every Monday and go over our workload and share anything that we think would be useful to our team members and our clients, and discuss any issues that we might have. Encourage staff to report misconduct. We recommend a whistleblower policy. There's a question, we'll look at that in a minute, on the 990 that asks if you have a whistleblower policy, which, like we mentioned before, is available to your donors to see if you have some of these things in place. And then reward integrity and discipline breaches of conduct. A lot of times when there are breaches of conduct, people want to deal with it behind closed doors, but it's actually better to let the rest of your team know that you're following your disciplinary policies, because that way they're a little more aware of them and they'll take them more seriously. Another way to prevent fraud is to do a risk assessment. It's a process to identify and evaluate things that could have a negative impact on the organization. It's not just financial risks. It could be PR risks, human resource risks, things like that. It can be formal or informal. You can have somebody come in and facilitate it, or you can do it internally. To get the best results, you should involve persons at varying levels of the organization to really identify all the risks and how they impact all layers of it. To perform one, typically you have a brainstorming session about what is, so one would be a fraud risk assessment. So you would have a brainstorming session and say, hey, if somebody wanted to commit fraud here, what would they do? How could they do it? Where are checks and balances maybe not as strong as they should be? And then you want to assess the probability and the likelihood of the occurrence. Because again, you have to put these controls in place using a cost-benefit analysis. You don't want to use all of your resources to put in a control that's really mitigating a risk that's pretty small to you. Then you prioritize the risks that you're going to focus on and take action to mitigate it or eliminate it. I found this really cool sustainability tool. Let's see if I can get it to open so you guys can see it. Are you guys seeing the financial sustainability checkup?
No, it's not coming up yet.
Do you see it
There
now?
we go. Mhm.
Okay. So I thought this was a really cool tool. And it focuses on these 4 areas, and you really just go down it like a checklist and say, like for budgeting and planning, is an income statement created for each line of the business department or program or cost center? If it's not, you go in the challenge category. Maybe you do it for some programs, but not all of them. And then yes, it's healthy. So you can use this to go through and just kind of rate your own organization. Like down here, bank reconciliations, when. If you're only doing them quarterly, that's challenged. That's not really recommended. If you're doing them monthly, that's better. Bi-monthly is healthy. I don't really think that that's necessary. I would say monthly would be perfectly healthy. Financial report preparation. Are you doing it 1 to 2 months after the year or month end? That's not really timely. You want your board and management to have timely information to make decisions on. Within 30 days is great. Within 10 to 15 days is much better. So you could just go down all of this and rate yourself. And this would be a really great jumping point to do a risk assessment for the organization as a whole. And it's a lot of questions. It's really only 2 pages. So I just wanted to share that one.
That looks like something we'll definitely put on our resource page with the Nonprofit Institute. That's a great tool.
So just going through the process of a risk assessment usually leads to strengthening internal controls and better governance practices. I would recommend doing it annually. Some organizations do it kind of in conjunction with their annual budget. That's a great time to talk about risk. Okay. And so that kind of brings us back to the segregation of duties that we talked about, that Jenna talked about. Ideally, you would want to segregate these 3 duties. You don't want any one person to do all 3 of these, which is the custodial function where they actually have the cash or the checkbook. The recording function, they're the ones preparing source documents or posting the activity in the accounting system or the spreadsheet or whatever manner it is that you're tracking your activity. And then the authorization function. So for example, if they have the checkbook, they're an authorized signer on the checkbook, and then they post it in their accounting system, they could be writing checks to absolutely anybody. There's really no control over that. There are things, so that kind of leads to this, how to segregate with a small staff. If you are in a situation where you really don't have the ability to segregate the duties very well, you can put in, like I talked about before, mitigating or compensating controls, like monitoring and oversight that will reduce the risk of fraud. They're not as good as really segregating the duties, but they're better than nothing. We talked here, the accountant should not be able to authorize the bill payments or bank account transfers. So we would recommend setting up separate approval by another person, either the executive director, if that's a different person from the accountant, or the president or treasurer, if you really just have a one-man show. The person that authorizes the payments should not have access to the accounting system. So the person signing the checks shouldn't be able to then go into the accounting system, because then they could alter the payee of the check. Like I mentioned before, one of the best controls you can do is careful review of the bank statement and cancel check images each month, especially debit and credit card transactions, online bill payments. Like I said, look for duplicates like Verizon payments, MECO, things like that, credit card vendors, unknown vendors, unusual amounts. And then, like I said before, even if you're just a 1-employee organization, you can have your board form an auditor or finance committee to come in quarterly, even biannually, and just randomly select transactions and trace them to the supporting document. Because again, just having that person that's doing the work know that someone's going to come after them and look at it is itself a really great preventative control. I included this, I just thought it might break up the 3-hour class. It's like a little broad case study. So if you guys want to read through it and then we kind of talk about it.
Is this real?
Yep. It's quick. We already talked about most of it.
Hold on as well.
So reading through this, what segregation of duties was missing? What are some of the issues here that allowed her to do this?
Well, she was handling the money on both ends.
Yeah.
You cannot have access to writing, making the deposits and also writing the checks. You got to have two different people doing that.
What controls would you recommend putting in place here that would have either prevented this or detected it?
Well, she should not have access to do the disbursements from the bank account and also have credit card authority and recording the transaction. So if you're going to record the transactions and that's the money's going in, you cannot also write the checks. So she had to pick one or the other. She either was going to record the transactions or she was going to handle disbursements, but
Yeah.
she couldn't do both.
Exactly. So segregating the duties between what she had access to and the recording function would have prevented this. But also that monthly review of the bank statements, if that was being done, even if she still had all of the duties, if someone was doing that level of oversight, that should have detected it. That would not prevent it. That would detect it after the fact. So when you're just using the detective, that doesn't sound right. When you're just using a mitigating control like that, you're still at the risk of losing whatever fraud they get away with before you identify it. But it's better than not doing anything at all. So a preventative control is much better, like segregating the duties. But if you can't, if your organization's too small and you can't figure out how to do that, you want to at least be doing some oversight and monitoring.
Yeah, and that's where when Chris was mentioning the importance of having the cancel check images, because if you're just looking at like a cash register from the accounting system, what she was doing is writing the checks for herself and then putting it in the accounting system saying it was going to somebody else. So I mean, if you just look at the bank statements and don't have the cancel check images, I mean, you can easily say this is check number 1,000 for, $200, and that matches up with the bank statement, but who is it actually being paid to?
Right.
That's
Yeah,
kind
the only way to really identify it is looking at the cancel check images as well.
Well, and wouldn't the monthly statement also show a payment to an auto loan company? I mean, that would seem like that would raise a question to people looking at everything. Well, what company is this? What business are we doing with them? That kind of thing.
Yeah, absolutely. And that's what I'm saying, like as more and more organizations are going to online payments, we want to be looking at those online payments closely. And that's a risk. Like we do have nonprofit organizations that have vehicles. Like maybe they have caseworkers or something that go out to visit consumers in the community. So there's another risk. Maybe seeing an auto loan payment isn't that unusual, but how are you making sure it's the one for your vehicle and not their personal vehicle? And that's where having some approval in place before these online payments are done is important.
Okay, a question though. Do you think that, banks stopped sending the actual canceled checks and they send you an image of the check, but do you think that fraud went up when they went into, instituted that policy of not sending the actual cancel check?
I don't think so. I think the image still gives you all the information that you need. I think the bigger risk is that sometimes banks now don't even do that. Some of them it's a fee, or you have to request that they send you the images. Some of them the images are only available online, and if that's the case, that's where we would recommend that whoever's supposed to be doing the review of the bank statements has read-only access to the online account and is documenting that they're going in there and looking at the cancel check images. Even if it's a fee, I think it's a nominal one. I think it's worth paying the fee to get the images because of the risk of check fraud. Right, so we talked a lot about fraud, and then I wanted to talk a little bit about the fiduciary duties of the board. So when you join a board of directors, you're basically agreeing to be a fiduciary of that organization, and that has 3 legal duties. The duty of care, which is to ensure prudent use of all assets, including facility, people, and goodwill. The duty of loyalty, to ensure activities and transactions are first and foremost advancing the mission, disclose conflicts of interest, and make decisions in the best interest of the nonprofit. And a duty of obedience, which is to ensure the organization obeys laws, regulations, and its own bylaws and mission. So I recommend with your nonprofits, you make sure that the board members are well aware of each of these duties. Carrying out fiduciary duties, we recommend having written financial policies. They provide transparency and accountability. Having regular board meetings. That was one of the things on that sustainability checklist we looked at. One of the questions is, how often does your board meet? I've seen some that meet like twice a year, and that's really, honestly, in my opinion, not enough to be carrying out those fiduciary duties. Quarterly is good, monthly is better. Financial reports should be presented and discussed at each meeting. Ideally, they would include prior year comparisons and budget comparisons. I think it's best to send the financials to the board. So even if your board only meets quarterly, the monthly financials should go out to the board so they can review them and ask any questions. I also think it's best to send the financials in advance of the board meeting and asking them to look them over so that they're prepared to discuss them at the meeting. There should be regular meetings of an audit and or finance committee, and each committee should report to the board. This is where we talked about maybe having, some organizations have a finance committee and they're the ones that really meet with management on a regular basis, maybe monthly, but then report to the board at quarterly board meetings. They're the ones that select the audit firm if there's an audit required and make sure that all of those requirements are being met. That would also be the committee that I keep talking about, having like a quarterly internal audit review of your books. I think that's the committee that ideally would be charged with that. And then the board should also be performing an annual evaluation of the executive management, including determining the compensation. So that kind of leads into, we talked about fiscal clarity. What are you measuring as an organization? Here are some things that should be looked at on a regular basis. Management, the treasurer, the finance committee should be looking at monthly bank and credit card reconciliations. You want to look for uncleared items, or if there's a slew of uncleared checks, why are they still outstanding? Has anyone followed up on them? Even more concerning is a lot of uncleared deposits. Deposits usually only take a couple of days to clear the bank. So if you have a bank rec and there's a bunch of deposits in the books that still haven't cleared the bank, I would want to look into this. Are they duplicate transactions? Are they fraudulent? What's going on with them? Accounts receivable listings should be looked at for anything unusual. Accounts payable listings, same thing. Any vendors you don't recognize, negative balances, long overdue balances. The balance sheet should be reviewed. Ideally, you would want to look at your income statement or profit and loss by program or department or class, however it is that you're tracking it. And then you also want to look at it by month. Do the variances make sense? That's really what you want to look for. When you're managing the organization and then you're on the board, what you should be trying to do is applying your knowledge of what's going on with the organization to the financials. Like you just heard that the health insurance premiums went way up. You would expect to see a spike in the health insurance expense then. If there's a spike in payroll expense, that should be, you should be able to explain why. Did you guys just hire somebody, or did you give somebody a significant pay increase? If not, why, what's driving that? And that should be a question that you're asking. Budget to actual comparisons are great. And then most organizations have their own trends or key indicators that they track, such as number of consumers served in a program, number of new donors, things like that. Whatever it is that's vital for your organization to measure its success should be looked at on a regular basis. So I included a couple, let's see if I can make this a little bigger. So this is just a sample comparative balance sheet that could be presented at a board. So it shows this year, last year, the difference, and then the percentage difference. So what you want to do is you should be able to go down this and ask your accountant or your executive director, if they're the ones keeping the books, what is driving some of these really large increases? Why are your investments down by $82,000? Where did that money go? Or has it just been a really bad year for the market? Your liabilities are down. Have you been paying them off? Things like that. And then I also had so this is a sample budget comparison. So you budgeted $125,000 for your program fees. Your actual is $111,000. Do you know why it came in under budget? Same with like your payroll expenses are under budget. Did you lose someone during the year? Does it make sense? That's really ultimately what you want to look at. Like you budgeted for a bottom line of 3,400 and you actually had a loss of 13,000. Can you explain what caused that loss based on what you know about the operations for the year? So we would recommend, so what I had done before, I'm sorry, I'm kind of jumping all over the place. This slide is what we recommend top management and the treasurer and the finance committee to be looking at. It's more detailed, it's more reporting information. They should be looking at stuff at a more granular level. And then what goes to the board should be more summarized. A balance sheet, income statement compared to the prior period, budget to actual, and then any vital KPIs. Board members do have a fiduciary responsibility to the organization. So we encourage board members to provide the active financial oversight by looking at these top level reports and asking about variances. A board meeting should include informal risk assessment discussion over the financial state of the organization and any new potential programs or significant changes. And these kinds of discussions should be documented in the minutes. Then the next thing I want to talk about was filing requirements for a nonprofit. These are all the potential forms that a nonprofit is required to file. There's the annual information return, which is either Form 990, 990 Easy, or 990N, depending on the size of your organization. That's due 4.5 months after your fiscal year end. So if you're December year end, it's due May 15th. If you're a June year end, it's due November 15th. There is a 6-month extension available if you need. Then there's the Maryland annual report or personal property return. We have found nonprofits that don't know about this filing. This is due April 15th of each year. This is if your nonprofit's incorporated in Maryland. If your nonprofit's incorporated in a different state, you would need to look to that state to see if there's a filing requirement. There's nonprofits are exempt from personal property tax, but you do still have to file the report. It keeps your organization in good standing with the state of Maryland. Then there's the annual update of registration. This is due 6 months after the fiscal year end. But if you file an extension for your 990, that will extend the due date of this. This is required only if your organization solicits contributions, charitable contributions. So if you are an organization that's primarily funded through program fees or government grants, then you won't have to fill this out. The instructions show you whether or not you have to file it is based on adding up different lines on your 990, and the instructions tell you exactly what to add up to make the determination. If your organization has payroll, there's a slew of payroll filings involved, monthly, quarterly, and annual. 1099s is a big one that a lot of nonprofits think that they're exempt from, but they are not. 1099s have to be issued to any vendor that you pay over $600 during the calendar year for services or rent, and they're due January 31st of each year. And then lastly, W2Gs. We do have nonprofits that do some bingo or other sort of gambling fundraisers. So you need to consider if you are subject to this filing requirement. There's a big formula involved to determine it. It's based on if the winnings are a certain percentage factor of the bet that was placed. So basically, if you're doing gambling, anything like that, I would reach out to an accountant to see if you may fall under this filing requirement. We don't see those very often. So some things that are threats to an organization's charitable status. Lobbying activities or donating political campaigns is pretty much a no-no. You can't operate for the benefit or private interest, such as the founder, the board member, etc. So that goes against your fiduciary duties of operating in the best interest of the organization. Having a lack of public support. Every charity, when you apply to be tax exempt, you have to either apply as a public charity or a private foundation. The difference being if your organization is going to be supported primarily by public contributions or maybe government grants versus donations from a few individuals. And the 990 includes a public support test, Schedule A of your return, where you calculate whether or not you have the required public support. And it's a 5-year test. I think you aren't really at risk of becoming a private foundation until you fail the test, I think, for 3 years. Missing informational filings. This is a big one. Not filing your 990 or 990T. If you don't file for 3 consecutive years, the IRS just revokes your exempt status. I believe you have to file a 1023 all over again to get it back. The Maryland Charitable Registration or Renewal. There's actually, yeah, we'll talk about that a little more in another slide. I'll take you to the site to look at that. And then the Maryland Personal Property Return, like I mentioned, you don't owe personal property tax, but you do have to file the return to stay in good standing in the state of Maryland. Not issuing required donor acknowledgements. You have to issue a written acknowledgement for donations over $250. And you also have to issue them for quid pro quo contributions. And a lot of organizations don't know what that is. That is when a donor gives you a donation of at least $75, but they get something in exchange. You're required to give them something in writing telling them the value of what they received, because their deduction on their tax return is only the contribution amount. So for example, if you have a gala and you sell tickets at $150 a ticket, but in exchange for that ticket, the donor gets a really nice dinner and some wine and maybe a goodie bag. You have to quantify the value of what they're receiving in exchange and either put that on the ticket or on the invitation. That has to be somewhere in writing. So for example, if the value of the dinner and everything they received is $50, the donor can only deduct the $100 on their tax return, not the $150, because they got something back for what they paid. And there are questions on the 990 to identify all of these issues. I wanted to bring special attention to this. It's a little blurry. A lot of organizations don't realize that the IRS has put a question already on the 990 asking about the number of 1099s and the number of W-2G forms that are filed. And my belief is that they're putting this here to get ready to start investigating nonprofits that continuously report zero under the number of 1099s being filed, because they know that that's a big area that nonprofits are not complying with. And I've had numerous organizations tell me, well, I'm tax exempt, I don't have to do that. And that's not true at all. You're just exempt from paying tax on your organization's tax exempt income, but not from any of these other filings. So as I mentioned before, I was going to kind of talk about using Form 990 as a fundraising tool. There are some things that you can kind of beef up in your 990, because as the gentleman on the YouTube video mentioned, people are going to GuideStar to look into nonprofits before they're donating. So this is actually an opportunity for you to demonstrate your program accomplishments. There's also a whole section we'll look at where you can list the governance policies that you have in place to show the donors that you're transparent and being responsible over your fiduciary duties. So let's see here. There's like right here, you can list the number of volunteers. A lot of nonprofits just overlook that. That's a great piece of information to tell your donors. You can put your website. That isn't always filled out. Here's the big one. This is the statement of program service accomplishments. This is where you're supposed to list your 3 largest program accomplishments during the year, including expenses and revenue. I see a lot of nonprofits that just lump it all into one and give a really generic description right here. But this is your opportunity to say, we did this program, we served this many consumers, we issued this many scholarships. I say the more detailed you are here, the better. I actually recommend, if you have like a development director or a fundraising person, that you have either an outside accountant or someone who prepares your 990, and then have that person go through it and see if they can't punch up some of this information to better reflect what you actually accomplished. So my point is not to just look at this as a compliance requirement, because your donors are looking at it. These pages just ask 1,000 questions to see if you have to attach something additional. Here's the one about governing body and management. This section asks questions about your officers, who gets to make decisions. It asks how many voting members you have, and then how many independent voting members. You have to disclose if any of your members have a relationship, like if there's a husband and wife on a board or 2 business partners on a board, that has to be disclosed in your 990, and they can't be counted as independent. It asks if you document the meetings of all of your minutes and any committees. Here's the big one. This is the one that was mentioned in the video. Did they become aware of a significant diversion of the organization's assets? And then the section below asks about policies. What's your policy for reviewing the 990? Do you have a written conflict of interest policy? Do you monitor and enforce compliance with the policy? Do you have a whistleblower policy? Document retention and destruction? So again, if I'm going to give money to somebody, I want to know, are they being responsible with it? Do they have these policies in place? So this is a great way to put these policies, I mean, this is a great driving force to put these policies in place, and then to make sure that you're answering this appropriately. I think those were all the ones I wanted to mention.
Joe just made a good point in the chat that the National Association of Voice Council, I probably have that wrong, Joe, gives the board members copies of the 990. And I've never been on a board, served on a board where that happened, and yet that would be so informative and would draw you in terms of stewardship, you know, the financials, to have you looking at that and asking questions, or, you know, the whole bit. I think that's excellent.
That's actually a question on here. Has the organization provided a complete copy of the form to all members of the governing body before filing? And then you have to describe on the attached schedule what the process is of reviewing the 990. So yeah, I think that's great to do.
Yeah, the first time I got it, I go, what is this?
It's pretty, I mean, it can be overwhelming. But if you, once you kind of figure out how to read it or what areas to really look at, you can glean a lot of information off of it. Like this section here is where you list officer compensation and average number of hours per week that each person spends on the organization's activities. So that's one way, you know, you get to see how much your top executives are being paid. And it even includes compensation from a related organization needs to be disclosed here as well. Another one is if you have any independent contractors that you pay over 100,000, you have to disclose that here too. So a lot of that only really comes into play with some really large nonprofits. But what they're trying to do here is they're trying to force transparency. Any questions on the 990 that I can help with? All right.
So Jackie just said that Jackie, could you talk about that? You said you share the 990 with certain members and then a redacted portion for others. How does that handled?
Right, yes. So the full 990 includes donor names, addresses, and amounts that they donated. Yeah. And we just feel a little uneasy about sharing that out with the full board. So we send that version to the president, treasurer, vice president, and secretary, get their review on that first. And then when we get their okay, we send out the public information version to the full board. So that doesn't have the donor names, addresses, and amounts they donated in there.
Yeah, that's a great point. If you have to file Schedule B where you list your large donors, you do not need to make that publicly available, and it's actually recommended that you don't, because that's releasing some pretty private information.
Right. It tends to set off conversations that don't need to be had sometimes.
Yeah. So then one of the other filings I mentioned is Maryland's Charitable Organization Division. There's a registration when you start soliciting donations, and then there's an annual renewal that needs to be filed. And just in case you didn't know, anybody can go here and do a search for your organization. If I can figure out where. Oh, if you're done, click here. Yeah, so there's this whole database that you can search, and it'll tell you if the charity is in good standing in the state of Maryland or not. And we have had organizations that knew about the 990 filing that had no idea that this was a required filing. Again, this is if you're soliciting charitable donations. So if you're an organization that doesn't solicit donations from the public, this isn't a required filing for you. If your revenue stream is mostly program fees or, like I said, government grants, then this won't apply to you.
One thing that St. Mary's County experienced when in fact, they're still managing the COVID relief grants to nonprofits and businesses, is that many nonprofits weren't in good standing with the state, but it wasn't the charitable division, it was the assessment and taxation division.
The
And
personal property return.
correct. So they, people, many organizations think, well, we don't have personal property. We don't, have anything really. And yet they still must file every year. And that was a huge problem in administering who could get a grant or not, and then helping that organization to go through the procedure so they could be, recognizing what they needed to do in terms of that annual filing.
Yeah, so this is the site that you can go to make sure that you're filing that on time. Like, it doesn't always work the first time. So anybody can search here. This is what you're looking for. This business is in good standing. If you're not, it will say this business is not in good standing. You can also look at a filing history. You can find articles of organization or incorporation, and then you can look at the filing history for the annual report personal property return. So if you're not in good standing, I would come to this page and see where you didn't file a return, because that's most likely what's causing it.
There's one other place that I find you can get hung up on, is if you're registered to file sales tax or withholding tax and you don't have any for a quarter and you don't file a zero, then you'll get hung up in if you're owed any state payments or anything, or possibly the relief program we're just talking about. You have to file zero if you don't have anything.
Yeah, that's a very good point. We do have some nonprofits that have to file sales tax because they sell merchandise. And so a lot of times maybe you only do it once a year at one event or something like that. So you don't file a return until that event happens. You actually need to file with the state of Maryland every quarter or close your sales tax account. But if you don't file a zero return, even if you don't have any tax to remit, then they mark it as like a delinquent filing. That's a very good point. The other thing I wanted to point out is, and I know Jackie's familiar with this, if you're soliciting contributions in other states, you should be looking to see if you have a registration requirement there, similar to the Maryland Charities Division. There is a United Registration Statement that is accepted in 37 jurisdictions. The benefit of doing that is you can complete that and then submit it to all the different states. The problem is you still have to submit it to the states individually. There's not like a centralized submission that you can do. And I included on here this NASCO survey lists by state what the registration requirements are. So if you're not sure, you can visit this. And it just lists it by state agency with some links, all kinds of good information. And then there's some stuff here. One of the issues now is states wanting to go after organizations for internet solicitation. So this organization issued these advisory guidelines to determine how worried you should be about doing internet solicitations and what states you should consider filing in. And Jackie, how have you guys been addressing this?
So we actually outsource that service just because, so you can go to that central registration, but that you do still have to look and see if you need to file in every state, and every state is slightly different, of course. Even the ones that use the standard registration form are slightly different and have different requirements. So we actually outsourced it, and that company keeps current on everything. We still have to do quite a lot of work to fill out. They have a portal that we have to fill out and answer questions for each state, but then they will actually fill out all the paperwork. We can, they send us a bunch of forms that needs to be signed, but we can delegate signature authority to the outsourced company as well if we want to. It's a pain in the butt, to be honest, but I'm working through it right now. Actually, it's how I know it's very fresh in my mind, trying to answer all these questions. But for us, it works out. It's a very time-consuming operation. But we do have a website and we do have a Give Now button. So basically, we are able to fundraise in every state. So we have to be registered wherever we need to be registered.
Yeah, so I would say if you are going to have internet donations, like a donation button on your website, I would recommend reviewing this document to see and performing a risk assessment to determine what you feel that you need to do to be in compliance.
Obviously, we have a big alumni base, so we can
Right.
be anywhere. But some of these, the smaller local nonprofits may only be fundraising in Maryland, so you may only need to do that. Again, as you say, Chris.
Right. Even if you have an online donation button, that doesn't necessarily mean that you're actively fundraising in other states.
Right.
So that's why I said, like, walk through the principles. But yeah, like with the foundation, they're reaching out to alumni who have moved all over the country after they graduated. So they are actively pursuing individuals in other states.
Right. Even if they don't donate, we still are soliciting there. So.
Right. I also added this one in. This is my last slide, and we can take another break. There is, I'm not sure if everybody knows, but there is a disclosure requirement for if you solicit contributions in Maryland. You're supposed to include a statement that the copy of the current financial statements is available on request, the name of the organization, the address and phone number where individuals can request a copy of the financial statement, and a statement that it's available from the Secretary of State. So there's a sample here, just in case you need it, of what is expected to be included in any solicitation materials that you send out. And for that, that's my big section. Jenna and I both have a few slides to talk about COVID, but if everybody wants to take a break, we can do that. Or if anybody has any questions for me on all of that.
So why don't we take about 5-7 minutes and come back together again and finish up. And, so we'll see you in about a few minutes. All right, bye-bye.
Could you go back to that slide?
Is that good?
Thanks.
Sure.
So welcome back, everybody. Want to get started for the tail end of an incredibly interesting and amazing amount of detail in terms of financial management. I'm definitely going to have to go through the slides and try to absorb everything because, as Rosanna says, it is a lot. I did want to ask you back to 990s. I'm familiar with the 990 and the 990 EZ, but you mentioned the 990N and the 990T. Could you talk a little bit about the differences between those forms?
I was muted, sorry. The 990N is, it used to be called the postcard. That's if your total revenue is less than 50,000, I believe. It's no longer a postcard, it's just an online submission on the irs.gov site where you just put some basic details about the organization and you click a button to confirm that your revenue was less than $50,000. And that's all you have to do. So it's to ease the compliance burden for really small nonprofits. The 990T is for unrelated business income tax. it goes along with your 990. It's a separate return, but you file it kind of in conjunction with your 990. So that's if you have any form of revenue that's unrelated to your tax exempt purpose. Things that we see a lot is like sales of periodicals. Like I used to have a client that was an association and they did an annual directory every year and they sold ad space in it. And that's considered unrelated to what their tax exempt purpose was. So they had to, that advertising revenue was unrelated business income, and then they had to allocate a portion of the costs of the directory against that income, and any net of that was taxable income. Another one we've seen around here is pull tabs. Gambling income is not related to your business purpose. So if you, there's a few exceptions to that. One of the biggest exceptions that we see most nonprofits apply is if the income effort is done entirely by volunteers, then it's not taxable income to you. So if you have a bingo operation, but everybody that runs it is volunteers, then that's still not unrelated business income. But if you're paying individuals to run your bingo operation, or what we've seen a lot of is some places we're having pull tab machines in local bars and other establishments, and they were paying a cut of the profits to the establishment. So then it's not being run entirely by volunteer efforts. You're actually paying for that fundraising income. Then that's unrelated business income. And you have to report that on 990T and pay tax on it. Any other questions on that?
It makes me think the community theater I participate with, they used to sell ads in their program for the particular play. And at some point, the treasurer understood we couldn't sell ads. So hearing what you're saying now about these unrelated income, that's something we'll need to look at again to see if we're allowed or not allowed. But appreciate you going over those other forms.
Yeah, sure. And there's a 990 publication addressing unrelated business income that I could probably send you a link to. It wouldn't be a bad thing to add to your resource page. Good deal. All right. This is pretty, we only have a few more slides to wrap up, so we're gonna go through them kind of quickly, I guess, as compared to everything else. So I have a couple of slides just on how COVID-19, how the pandemic has specifically, impacted organizations' control environment. So a poll conducted by Ernst & Young, which is one of the big accounting firms, global accounting firms, all respondents said that COVID-19 had impacted their control environment in some way, shape, or form. 31% identifying a significant or moderate impact to their procedures. So internal financial controls on financial reporting were not originally designed to support, were not originally designed for operation in remote working context. I know that, due to the pandemic, we're all kind of forced in different directions and doing things that we normally maybe would not have been doing otherwise, but we want to keep, business running, kind of have to make some changes. It requires some more judgment to execute, evidence to certify and test controls, to maintain compliance with all relevant financial reporting and regulatory requirements. So I just wanted to kind of reiterate, as we kind of talked about earlier. So it's a good reminder that if you were kind of forced into changing the way you operate, to kind of sit down and think about how what controls have changed and whether or not there are any gaps that are now in your controls that weren't originally there.
and just see if you need to reallocate your resources or segregate any additional duties. Just a couple of just tips. If you have external auditors or even just an accountant that you work closely with, stay connected throughout the whole thing. You do an annual audit, that's not necessarily the only time you need to talk to your accountant. If there's any questions that you have on, how anything you change in the organization may affect your audit, or just your financials in general, just reach out. We're here to help. Share areas, identify where the internal control environment needs to be enhanced, review key accounting disclosure implications. So as a result of this, we've seen a lot of additional disclosures that were required, that are required in financial statements, just strictly related to the pandemic. If a business has had to close their doors, or if there's a significant going concern, where they feel like they may not be able to operate in the foreseeable future if things don't change, those kinds of things. Respond to changes in the working day timetable, so documenting your controls and any changes that were made to your controls and processes. Attention should be given to improve the security of your mobile working environment, as well as performance or capability issues, for example, increasing controls around just IT accessibility. Again, kind of going back to your accounting system, making sure that not everybody has access to all areas of your accounting function, that there's controls in place to mitigate those risks. Even, something just simple as you have your own, desktop, make sure you just lock your computer so somebody can't just come in and jump on your computer. So usernames and logins and strong passwords, those kinds of things, and just locking your computer are pretty good controls. And again, may need to allocate responsibilities to avoid any conflicts and segregation of duties. If you started doing things more online rather than manual checks or just any processes that have been transitioned. Kind of hammered on the use of technology throughout this whole thing. Use it to your benefit. Revisit your IT control environment. There are plenty of solutions out there, and it can help support the trust and financial controls and reporting just by designating certain individuals, if they have their separate login and password. The chance of anybody, fraudulently approving something that shouldn't otherwise be approved is greatly enhanced. I can't just go in and sign somebody else's name if it was on a piece of paper and hope that my signature kind of matches theirs. You can gain benefits by automating the workflow and internal controls, and enhance the IT infrastructure to support remote communications between the insurer and the external auditors to enable a safe environment for sharing audit documentation. So as we've experienced as auditors during this time, where we normally would have clients that we go out and perform field work for, we're not visiting as many offices to perform the audit. So using secure client portals and exchange methods to upload and download information from your clients if you have to go through an audit, just making sure that you're exchanging information in a safe and secure method. And then, okay, that was everything that I had just specifically related to COVID. It was pretty brief, but I think it touched on some pretty big points. I'll go ahead and throw it back over to Krista to wrap it up. Okay, I was just going to talk a little bit about the COVID funding options and see if anybody had any questions regarding those. To start, I want to give a shout out to the Nonprofit Institute, which has a pretty great resource page for nonprofits that identifies the COVID funding that's available. So I included a link to there. Here's where they have the grant. Charles County and St. Mary's County. Charles County, the deadline for their grant is the 22nd, which is Thursday.
To be eligible, you have to be able to document a 20% loss in revenue. St. Mary's County grants are still open. I didn't see where it actually had a close date. I think they're open until they go through the allotted funds. But to get one of their grants, you have to document a 30% loss in revenue. Calvert County's grants are closed at this point. But the applications are still under review. So if you just apply for one, it's possible that you'll be hearing from them. And then I see there's another one on here for craft communities. So this is a great, I would visit this often if you're an organization that was really negatively impacted by COVID, to see what options there are. I know several of our clients got grants through St. Mary's County, Calvert County, Charles County, and they've been kind of a lifeline to help them function during these difficult times when maybe a lot of their operations are shut down. And then the other big one, of course, is the SBA Paycheck Protection Program loans. Have any of your organizations received PPP funding? Doesn't look like it. Okay, well, if nobody got it, then this information's not as useful. But it's here on the slides if you want to visit it. And then I also have a slide to account for the PPP loans, because that's a big question on how to account for it in your financial statements if you did receive it. And then finally, I had a slide with some additional resources. There's a good article here on nonprofit fraud risk. This one's really great with some financial policy guidelines. So if you're looking to add some of those policies we looked at on the 990, those questions like whistleblower, conflict of interest, both of these links can help you with that. And then that full report to the nation, the Association of Certified Fraud Examiners, where I had taken those 2 charts on the impact of fraud on nonprofits. The full report is at that link. Pretty interesting stuff. Any other questions? Anything else we can help you guys with? We have like 9 minutes left.
No, it was very helpful. I mean, and it also causes us to think about things that we may not have had in place and that we should put in place. So I thank you very much for all of the information.
You're very welcome. And like I said, Robin's going to send out the slides. So you guys will have all of that information, all the links to the outside resources. Mine and Jenna's are emails at the front. There's got to be a faster way to do that.
I can add those to the follow-up email that I sent out, but I send out.
The website is on the title slide, but you can find us on the website. Or you can reach out to Robin if you want our email addresses.
So we want to thank Jenna and Krista. They've donated their time to be the instructors for this course. And not only, of course, the hours they've spent with us today, but all the prep time that went into their slide deck, which is, I mean, again, I don't know that I can walk away and feel like an expert on this subject, but I can go back to these slides to go, okay, here's the resource, here's what I should look at, here's what I should ask about. And I've been taking notes throughout along those lines. So this is some great information, and really appreciate your time and effort that you've given to the Nonprofit Institute and the many people who joined us today.